I go to India, I usually go about every 12 to 18 months, and I remember when I first went there, it was like this poverty was overwhelming to me, and it was so confusing to see people so happy, because all around them they seemed to have such squalor. I'd see someone sitting on the street, and there was just so much joy in their eyes if you took the time to feel them and talk with them instead of judging the environment. And then I come home to the United States where there's all this external abundance, and you'd find people, many of you know, I wrote Money Master the Game. I interviewed 50 of the smartest financial people in the world, self-made billionaires, and I wouldn't say the majority of them are really happy. And it has nothing.
I used to find my credit score really confusing, but then someone showed me this one trick.
Music boy.
Okay, Grand Rising.
Grand Rising.
Grand Rising, Grand Rising, Grand Rising, Grand Rising, Grand Rising. Good morning, sister. Get back to you today about the things that you sent me. And good morning. The latecomers will be late. Let's go over and have a look at some of the trades that we analyzed from yesterday. You can go and see whether they played out, how they played out, why they played out, what it looks like they're going to go and do. Remember what I said to you, we are building up to obviously launching our academy, having our morning sessions, evening sessions, back at Canary Wharf, and more importantly, having our core syllabus and stuff like that. And things are going to change from there, guys. And at the moment, we want to definitely build up. We're going to set a date that for the people who want to go and take a funded challenge. We're going to do the funded challenge together. Make sure we have accountability. Make sure we can all pass. Doesn't matter whether you're going to take it on a 10K account, or 50K account, or 100K account, 200, 400K account, whatever it is you can afford, that's fine. But we're going to go and we're going to do a prop firm challenge together and hold ourselves accountable by placing every trade in the group, from letting people know how we're up or if we're down. And when you're down and you've lost your trade, we can review it as a team and see why that trade didn't, was a good trade or bad trade. Because sometimes it was a good trade that you took, just didn't play out. Okay, there's nothing wrong with that. There's nothing wrong with having a good trade that just didn't play out the way it should have. Okay, it just happens. All right. Like I said to you, one thing that we can't control is what happens when we place a trade. All right, so we're gonna go back over GU. Now, yesterday, all right, we spoke about it. Check the tapes, check the receipts. We spoke about it, all right? The recording is on YouTube from yesterday. We discussed this. We discussed this trade over here. Or Monday it was, in fact. We spoke about this GU, and I said that GU is currently, price is broken out. Let's go to zoom all the way out first, right? Let's start from the start. Obviously, we are picking up the new edition rule. In fact, I'll tell you what, we don't need to start from the start. Well, let's start from the start, okay? So, my music should be very, very, very background. If it's not very, 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 very background, then please do let me know, and I will touch it down. But it should be background, and I should be loud and clear, all right? Hopefully. All right, there's a couple of times I haven't been loud and clear.
You are.
Thank you. That's good. All right. So, what we see in here, have a look. We don't want to. Good morning, Corrine, as well, sister. Long time. All right. So, we're looking at this chart here. Okay. And when I said that trading is simple, it just basically means that not necessarily like it's simple, because the complexities and all the different facets of trading, it's not actually simple. But the concepts and the understanding and what you should be doing is simple, all right? I mean, I don't care who you are, you can see that this market has been trading within this range that I've drawn, okay? you can see that this market has been trading down within this range. Right? It's quite clear. If I ask my, 7-year-old, which way is this market going? He would say it's going in this direction. Okay? Now, that can change, and this market can decide to start going in this direction. Okay? However, if you saw the tide was going out, okay, you'd assume it keep going out until it changes. You wouldn't jump in and the tide was going in one direction in the sea, and you just jumped in saying, okay, the tide's going to take you in the opposite direction at the point that you jumped in. It's going to be unlikely. All right? Doesn't mean that it's not going to change, because we do know the tide changes. It comes in and it goes out. But you're not going to assume at the point when you jump in, that's when the tide's going to change. So at the moment, this over here is what's going on. All right? It's a bearish, let me make that the right color. It's a bearish market, yeah? Since 2007, this market's been making lower lows, lower highs, and lower lows, and lower highs. Now, I don't care who you are. I don't care if you just started. The way in which I teach, okay, in my opinion, is clear. It's to the point. I try to use jargons and big words and abbreviate everything into massive abbreviations and overcomplicate this. This can be the market for anything. This happens to be the market for GBP USD, which is the Great British Pound against the US dollar, which isn't even a market. You can't go and buy any Great British Pound against US dollar. It doesn't exist. Okay, it's a derivative product showing you one price against another price. That can help us and it can hinder us. It's not a real thing. Okay? So, in my opinion right now, looking at this much bigger picture, if I want to swim with the tide, an ideal scenario would be swimming down, bearishly, downstream. That would be ideal. But because I'm not going to take a trade and wait around for weeks on end for candles to form, I'm not taking this trade on a weekly time frame. So this is relevant for the overall picture, but not necessarily relevant for what I may want to do today. All right? I hope you will understand this. Now, if I go down to the daily time frame, the daily time frame gives me a bit more of a relevant view, meaning that we're zoomed in a little bit closer, because remember, 2007 was a completely different world in many instances compared to what's going on now. What's going on now is there's wars and there's this, and we've had COVID-19 and there's X amount of presidents happening and there's BRICS and there's this and this different landscape. And if we understand that fundamentals are what drive the markets, not technicals, not us looking at the data after the fact and making decisions, but fundamentals. God forbid, a meteorite went and slammed straight into the financial, center of the world, or, hit New York or whatever it may be. Well, that's going to have an impact on the markets. Yeah, just like 9/11 had an impact on the markets. Yeah, just like things that are news related, fundamentals, things we can't account for, things that are going to happen in the world. That is what drives these markets. And then they work technically within that driving factor. Okay? So on a daily time frame, we can see how the market was making some higher highs, some higher lows, and some higher highs and some higher lows. In an overall bearish market, okay, let me get rid of this red line. In an overall bearish market, this market was making a bullish impulse, i.e. a retracement. This whole push was a retracement in an overall bearish market. Now, if you want, you can start writing these things down, saying overall, bearish. I tried to start doing that the other day, or didn't end up going through every single time frame. It got tedious. But you understand that. This is why we draw in our lines. We don't draw in our lines because we just draw in lines, and when the market hits the lines, we press the button. No, that's not what we do. I've heard some people say, oh, yeah, these people trade with trend lines. It's so basic. They don't know what they're doing. It's nothing to do with trading with trend lines. If I was trading by myself, I wouldn't necessarily need to draw these lines on the screen because I know that the market is bearish. Because I've been trading this pin, I understand what it's going to go and do. But to be fair, I would probably still put the top edge in. All right? I'd probably still put the top edge in. But if we knuckle down now, have a look on the daily time frame. We're zooming in now. Because even though we're zooming in here, and it looks like I've really zoomed in, this is going all the way back to the start of the year. All right? I mean, to the start of last year, or here we go. This is January 2023. So these candles that you can just see just here, is 365 plus candles here. That's more than enough data for us to analyze. So if we zoom in, I'm saying, okay, this market came and it touched up here, the top of our range. And let me make something very clear to the people that are watching at home and to the people that are on the call. When you see me draw these lines in, these lines are not lines. They're areas. They're like a range. The market is allowed to play around within that area. So as easy as this is a line, it could be an area. Does that make sense? All right. Like when I first started trading, I got really hung up with these lines. You're trying to draw these lines absolutely perfect. Let me draw this line absolutely perfect in here. Because if I draw this line perfect in here, the market's going to come and it's going to know that I drew the line perfect. And it's going to come, it's going to touch my perfectly drawn to the millimeter line. It doesn't work like that. We read and we react to what the market does. Okay? We read and react to what the market does. We cannot make the market do stuff because we've drawn lines on the screen. And we do not know what's going to happen in the future. I've drawn these lines because I'm saying that this seems to be an area the market keeps turning around in. That trend. And I also know that trends are always broken. Trends build up liquidity on the other side of the trend line. At some point, this market might decide to start coming up here. These are the things that I know. I don't know what's going to happen in the future. So the market came and dipped into our area. Look, all the way up there. And when it got up there, because of, let me explain to you some of the psychology of why these things happen. All right, you ready? Why these things happen in the market is because something called hoard mentality. All right, hoard mentality. So what do I mean by that? I mean that when I'm in carnival, or when you're in carnival, or when you was in carnival, when your kids are in carnival, and everybody starts running in a direction, the majority of people, especially black people, we don't ask no question, we just start running as well. Okay? We just start running. When somebody starts saying, why was you running? You say, I was running because he was running. And he was running because the guy in front of him was running. And we're just all running because we think that maybe Godzilla is on the other side of the crowd and we don't want to get eaten by Godzilla. So we was just running. Yeah? You see, I'm not the only person that has seen this trend like this coming down here. So, you get hordes of people who understand that this is expensive area within this range. So when the market gets up there, they instinctively want to sell from this area. They're scared to hold on because they don't think it's going to go higher than this area. They don't think it's going to go higher than this area. They don't think it's going to go higher than this area. Yeah, until we get some other kind of fundamental reasons or some big, institutional pushes that are going to decide to change some things. Yeah. So as I said, this went right into us. I'm going to get rid of this because it's taking up too much eye space. And our market came and tapped into here. Lovely, beautiful, right up in there. Okay. Now, when that happened, we saw a reaction that actually broke structure. Now this is on the daily time frame. Of course, there was smaller structure within here also, but the market came and broke all of that. Smash bang wallet, giving us an indication, especially if we take this as a kind of a major structure level. This is quite major as well over here. Okay, because look, on the other side of things, have a look. The market started trading within this narrower range. Remember, when the market's ranging, the market can do what it wants. You just have to identify the data. The data that I can see is the market was trading within this range and the smaller impulse was within these two little blue lines. So therefore, this is a significant, let me make it a different color, a significant bit of structure. And this is a very significant bit of structure. Okay? We can see this here. These are significant elements of structure. The market came and broke through it, smash, made a retracement, closed down below. For all purposes, you could have had an entry. All right? The market went like this, smash, broke through this structure, made a retracement, but didn't close back down below this level because it's decided that it wants to make the impulsive retracement element of its push, because we understand that markets move like this in waves. So even if this market went like that, smash through everything, we know at some point it wants to come back because markets move in waves. So we're not surprised by this push up here. Okay, so we've seen a bullish push up into these areas. Okay, and we might at this point in time try and we can pull out some Fibonacci's. We can try and look at different playbooks that we understand of where the market likes to retrace to. For example, right now this is 50% level, but if you guys can recall our golden zone, there is a golden zone that sits between the 618 and the 786. Can you see these two orange lines? They're orange because they're golden zones. And within that golden zone, that market, look, went exactly 50% in that golden zone, and we've seen some sort of reaction. But at the moment, that reaction isn't a foregone conclusion, because really what the market's actually been doing is going sideways from that point. Yeah, came up here, came back down here, didn't just go and fall to hell, it came back up again. And that's where we are right now. We're in that sideways action from the golden zone. From tapping into the golden zone. Can you see how I'm building this story? I'm telling this story fluently. Why? Because I'm able to read the candles. I'm able to read the candles as though I was reading a page in the book. Okay? Now, it doesn't, because I'm reading that page in the book, it doesn't mean I know what's going to happen on the next page. Yeah? I can start building up a story. Oh, okay, he's just saved he just slayed the dragon and now he's going back to the kingdom. I can assume that maybe he's going to go and, grab the princess and they're going to fall in love and live happily. I can make that assumption, but I don't know until I turn the page and I read the words on that page. And then what I realize is, oh my gosh, there's a plot twist. He comes back and he punches up the king, and he does something else and he goes nuts. You don't know. But I'm reading the candles. And at the moment, what those candles are telling me is that we've come up here, we've tapped into the 618, which is in a golden zone area where we see markets retrace and tap into. We've had a reaction from that that's broken some minor structure in here, but ultimately the market is still going sideways. Yeah, sideways in this area. So when the market was pushing up here in this impulse and I saw it break some structure on a smaller time frame, we was talking on Monday, and I said this market here has just done something that it's never done before. Let me remove these. Within that yellow range, the market was only, when it was breaking structure, okay, so say for example, let me point out some structural levels. All right, let's point out some structural levels. For example, like here, the market broke structure here. Can you see this breaking this structure here, but it didn't retrace and close back down below. Do you understand? It broke this little bit of structure here, break as it was coming back down in its wavy movement, but it didn't break, close, retrace, and close back down below. The only time it did that was, here's another bit of structure. The market broke, retraced, and closed back down below. That's the first time it done that in this entire push up here. Okay, so therefore that gives me an indication, gives me a correction, and gives me a continuation. That is an understanding of us being able to get into the trade. And I'm looking at an hour time frame, which you could have if you wanted to. That could have been your entry here if you was looking at the hour time frame, because the hour candle closed here. But we wouldn't be looking at hour. You would be looking at a smaller time frame, let's say 15 minutes, which is great. And your entry would have been around about here. And you would have seen, because I said, if this market breaks here, the likelihood is it's going to trade all the way down to this TP down here, this blue line over here. Why do I say that? What is the reason for me to say that? Because the market is currently consolidating within this box It's going to the top of the box, to the bottom of the box, to the top of the box, to the bottom of the box, to the top of the box, to the bottom of the box, to the top of the box, to the bottom of the box, until it decides to do something different. So right now, the fact that we broke and we penetrated this level is kind of indicating that maybe this market wants to come down. Maybe that tap into the 618 was definitely that reversal area. It's just doing a little hokey cokey, but it actually wants to continue coming down. Because really, if you look at it, it is making ever so slightly, watch. There's a high, there's a low. Ever so slightly, it's making a lower high. And this is a lower low at the moment. Ever so slightly, the energy is like, we're losing that bullish energy, that bullish momentum. And that is why I said that this trade here, we should get in for this sell, and you will see that market going, travel all the way down to the bottom of this range, and it got all the way down to here to a potential 1 to 4 trade. Fantastic trade. Okay, now we got down here, and this is a level of interest. This little wick down here, let's see who's been listening. What is this little situation over here? What can we relate that to? Of it coming and just on a 15-minute time frame, you can see some candles. On a 1 hour time frame, you can see it kind of like a little candle, some wick. On a 4 hour candle, we can see this little wick action. What would we say this could possibly be? What could it possibly be? If I take this little blue line here and then I draw something on it, you should know the answer straight away if you follow any of my sessions.
Liquidity, brother.
Liquidity. Good morning. Yeah. Good morning out. So liquidity. So I'm saying to you, however way you look at these markets, it's the same stuff over and over and over and over again. And this is why I ask these questions, not to baby you guys, but I want you guys saying these things out loud so that you understand that you understand. Because if you don't say them out loud, because someone else just shouted out, imbalance. And I'm like, not quite imbalance. Because then you now realize, okay, it's not the imbalance I'm looking out for. It's the fact that I understand, now Alan said, liquidity, that between these equal lows, which is actually 3 of them if you really want to go there, that liquidity resides. And when we see a grab of liquidity, even on any time frame, any distance, what do I always say to you after liquidity is grabbed? What does it like to do? Say it out loud. Reinforce it in your own mind.
Run in the opposite direction.
That's right. So when this market, if we was in here trading this market and we're in this trade, then we're like, wow, Jay's correct. I'm in this trade. Fantastic. I've got a 1 to 4 trade. I'm loving it. When we see it grab, this liquidity, we want to be either have our stop loss really tight up against this, just in case it drops to hell for some reason, or we want to be just taking our profits because or at least understand that that market is going to run in the opposite direction. Look at it run. Look at it go. I mean, literally, it's like, back in the day in school, we used to play, HAD, yeah? And or when you're racing, for example, and you run, you just touch the wall, boom, and you're off. Certain man needs to use the wall and kick off the wall. I think they're gonna get extra speed, boom, and run. Do you understand? This is 1, 2, 3, 4, 5, 6, 7 15-minute candles in the opposite direction. Yeah? That is well over an hour's worth of run in the opposite direction. Yeah? So we see this time and time again, and I go over it time and time again. Because it happens time and time again. And you have to be able to see it for yourself. It's not me that's going to be able to guide your eye and your hand. You must see it for yourself. So when you're in this trade, like, oh my gosh, it's killing it, and then you see it doing this, you don't panic, because you either knew that it was going to run in the opposite direction, and for whatever reason you just want to stay in the trade. Or you would have said, no, mate, I'm taking my profits when we get down here. I don't want to be involved in this run in the opposite direction, because this run could go wherever it decides to. Why could it go wherever it decides to? What reasons could this market decide to go all the way up into, some of these regions that you can see me identifying here? What reasons could the market go in there? I'm not saying it is. I'm saying it has reasons to. Yeah? I've got reason to go to South London because, John owes me money. I don't have to go, but we can see these imbalances that the market can say, you know what, I'm going to go and take that imbalance. So let me get this twisted. You already got in the trade here. Why would you want to sit back in this entire retracement down to zero? Zero monies on the basis the market is now making its retracement and it's going to go and collect this imbalance and fill these inefficiencies all the way back up in here. You don't want to do that. That's not trading. That's nonsense. You was up here, you was up $1,000 and then you're back down to zero. And I know for every single person on this trade, on this call, it's probably happened to you. And people at home, it's probably happened to you. You're up 50 quid or you're up 100 quid and all of a sudden somehow you got back down to zero. Why? What didn't you see that made you want to stay in that trade all the way down? Obviously, it depends on your risk reward, your size of your account. But let's imagine you're up here at 1%, 2%, 3% up in your account. Why did you stay back in that trade to go back down to zero? Now you've gone from, yeah, I'm in the money, to now you're crossing your fingers going, please don't stop me out, please don't stop me out, please don't stop me out. Please don't stop me out. You're praying to the pit gods. You're on one knee, yeah. You're doing all types of sign of the cross. You're looking at, you're trying to do, trying to stare at the screen like you've got, you're an X-Man and you've got some sort of powers. And you're going to make the candles move with your eyeballs. I know. I know. I've been there. So the point I'm making to you is now we understand that the market has to run in the opposite direction after grabbing liquidity. We don't want to be in no run in the wrong direction. Sorry, mate. This is my stop. I'm getting off. And I even said to you guys yesterday, do not put your stop all the way down at the bottom of the range. Place it a little bit before where you need to target, where you think the market's going to go. Why? Because the aim of the game is to make money. The aim of the game isn't to be a guru and be like, I told you it was going to go to this exact, this exact 1.25756 point, whatever. So that's the aim of the game. That's ego. Oh yeah, I knew it was going to go there, yeah, but I still lost money. But who cares? You're better off you didn't know and you made money. That's the aim of the game. All right. So now I'm looking at this market. What is my my outlook? Well, my outlook is this: the market is running the opposite direction on an hour time frame, and we have broken some hour structure. Have a look. Broke some hour structure. All right. Now, if I was to draw some lines in here, the lines would look like this. This would be the top end of the range, looking like so. How have I drawn that line? As Jade has managed that line, I'm touching this data point, which is the highest point, and the second point, and I'm extending that line. And then I can, if I want, hold control, make a duplicate of that line, like so. And I can turn around and say this market is trading within these ranges. Now you can see me putting these two lines, and you might have never seen this before, but this is just showing you the general energy of the market. I can start drawing another angle going here, another angle going, it's unnecessary. Don't need to do that. These lines are just for a guide. These lines serve no purpose apart from being a guide for my eyeballs to understand where that structure is, where that swing structure is, what range that market's been trading within. So right now, as you can see here, this, if I was to look here, when this market started accelerating down in here, let me make it a different color. Make it a better color than that. The market started to accelerate here, and we've seen this first break of structure, and within this little acceleration, this little push like this is a more significant structure over here than, I'm not even going to say that. So we've seen it break this 1 hour structure here. The question is this market going to retrace? Where is it retracing to? Where might it want to retrace? Say out loud to yourself. And if you've got it wrong, ask me the question of why it wasn't something else. Or unmute yourself so I can hear you. This wants to retrace back down and potentially close the imbalance. We know this. The question is, if we don't get an entry up here now on a smaller time frame, which we can look at, is this market going to then, after this correction, because this is that indication at the moment, it breaking above this high, this is an indication of where it might want to go on a smaller time frame. On the larger time frame, this breakdown here, breaking outside of the consolidation, is an indication it wants to go this way. But on a smaller time frame, this break above here is an indication it might want to push up. Where to? Maybe in here, closing those imbalances. However, I do not know, because I'm waiting for the correction and then to see whether we get some sort of continuation in this direction. So at the moment, I don't know if this market wants to go up and close this imbalances, or whether now it's just tapping back up into this level here. Look, on this blue line range, what a coinky dink, what a coincidence that it just, at the moment, just whipped up into that top of that range. Expensive in the range, okay? And whether or not now it's gonna say, yep, ready to rock and roll. I don't know. But what I do know is this. If I see this market come down in here, in fact, let's trade certain things. I've already said it's a bearish market. I've already said it's broken the structure, give me an indication wants to go down in here. Okay, cool. On a smaller time frame, let's see what entries are possibly there. So this is now the 5-minute time frame. And for purposes of beginners and people that are just getting comfortable with reading these candles, I really don't want to be smaller than 5 minutes. But I'm going to say to you that sometimes, or a lot, I do trade, and if I want information, I will drop my time frame down to lower. But to be fair, guys, it's not the best place to be. If you want to be consistently profitable, being less than a 5-minute time frame is a lonely place. It's scary. It's lonely and scary. Why? Yes, you're going to catch some 1 pip entries or some 5 pip entries and some 8 pip entries, and yes, you're going to get some those, but over time, your win ratio is going to go down. It's more noisy down here when you've got a 5 pip stop and you're looking at these little candles. There's so much noise. Remember, there's news and fundamentals happening all the time. You might be looking at red folder news, but orange folder news moves the market sometimes. So right now, have a look. This little impulse up here, let's look at structure. This is structure. This is structure. Structure in here. There's smaller minor structure in here also, but you can't see on the 5-minute time frame. But watch, let me show you. If I go to my 1-minute time frame, you can see. Yeah, you can see. You missed out a couple in here, 1 or 2 in here. All right. But I don't need to be here. But as you can see here, look, bear in mind I'm saying this is some structure. This market broke this structure, made a retracement, closed down below on the 1-minute time frame. Let's look at it on a 5-minute time frame, see if we get anything. In the 5-minute time frame, you can't see. I can see because I can see the movement of the candles, but typically one can't see that movement. All right. So if I was wicked and bad, I'd be turning around here saying that is my entry as this market closed down below. The indication below this little bit of structure, and the market's broken outside of the range, the trend, this yellow channel, broke outside of it, retraced, closed back down below. I could say that is an entry. This is a very aggressive entry above the last stop, which is here. The safer stop is above that area here. All right, that's only 17 pips plus your spread. I don't really know. And the question is now, look, remember, zooming back out. If I go into this trade, zooming back out, I'm already thinking to myself that there's a retracement that's going to happen to close that imbalance. So potentially on the cards, I'm thinking to myself, well, there might be a quick 1 to 2.5 there. Yeah, maybe the market doesn't want to go all the way down there and close the whole imbalance. Maybe only wants to close half of the imbalance. It's still a good 1 to 1.5 there, and then it potentially sitting there as a trade. Now, I'd like to be in this trade right now for a sell coming to close this imbalance, because the overall bigger picture, because of that indication over here, is that this market wants to go in this direction. I just don't know at the moment if whether it wants to go back up here first and then do this. Yeah, so I'd love to turn around and say that I'm in this trade here, but this isn't necessarily a 10 out of 10 out of 10 trade. It's not. It's more like a 7, 6.5, because we are at the top of a range, which is expensive, but we are in this consolidation block and we haven't really got confirmation that we're now changing from being in consolidation to being in a bearish market. In an overall bearish push. We're in this yellow block. But when we break outside this yellow block and start doing this, but then I'm like, okay, now the market is not in this yellow block, it's bearish. And therefore, at the top of this trade here, this is when if I took a trade here after we've seen some nicer, smaller breaker structure, I could say, yeah, guys, this is a 9 or a 10 or 8 or 9 trade. This one's not, because we are at the bottom of consolidation. And at the bottom of that consolidation area here, we're trying to work out whether or not this market wants to now continue, even though we've had this little indication here, or whether this market wants to come all the way back up in here. Or for all we know, I don't know, something else is going on. And it comes back up in here, and then it goes, you know what, Jay, I think I want to just jam in here for a little bit more. Yeah, let me jam in here for a little while longer. There's some news coming out at the end of next week. Let me just wait around in here. Yeah, or maybe it decides to go up, break above. I don't know. But I'm so comfortable with saying I don't know is the reason why you hear me taking these outlooks on the market saying it may do this or it may do that. I'm saying on a smaller time frame, if I had my way, I wasn't on the call, maybe I would have been in this trade here with my stop above here, managing my risk, all right, on the basis that I know that it's not a 10 out of 10 out of 10, all right, and on the basis that maybe I've got an early entry to this market, breaking this structure and continue going down here. I don't care, it's 20 pips. I don't care because I'll manage my risk. I'm not going to be in here risking 10 grand. I'm going to be in here risking whatever my risk is going to be. It might be $100. Okay. Now the reality is for me, like I said, if you're looking at this trade right now, you'll be just, okay, today's a good day. I'm going to be trading. I'm going to be looking at these charts. I would say to you this, wait for us to get a confirmation that we've come out of this yellow block. So I would say to somebody else, if I was teaching, if I was, telling somebody else to do as I say, not as I do. I said, wait till we break outside this box again and get a confirmation closure below this wick. Because then the market is looking like it wants to. Now let's look at it on the bigger picture. On the bigger picture, why is that a good thing if that market starts to roll? That market starts to roll after making a high, lower, low, lower, high. It ultimately means that we are going to be expecting to see, what we're going to be expecting to see, guys. We're going to be expecting to see a lower low. If this market is now starting this bearish run after being bearish, being bullish, doing a little consolidation at the top, which is always allowed to do, maybe we're going to be expecting to see it come and break this low. And that is a big trade that you could decide to hold, or at least once it starts going in there, you're in that momentum, and then you can start identifying your targets, yeah, based upon structure. If I got into that trade here and it started to run, I'll be saying, okay, this is a target. Let me draw it with this. I'll be saying, this is a target. Yeah? I'll be saying, this is a target. 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 They're all targets. Yeah? Or someone will call them TPs. Meaning that when they touch them TPs, what happens when they touch them TPs and you see the market push back? Not what happens, but what could possibly happen when the market comes down here and pushes below this level? What could possibly happen in this journey? Somebody knows. Somebody knows what could possibly happen.
The liquidity grab.
That's right. It could grab the liquidity and then you can start seeing that little pushback in the opposite direction. Because the market moves in waves. Now when it comes down here and grabs this liquidity from here, you can see it push back in this direction. Then when it comes and grabs this one, you can see it push back in this direction. So if I was in this trade and the market started kicking back on me here, I wouldn't be that bothered unless I chose to take my profits down here, which is my own choice. Because I know that the market kicks back. I know that the market moves in waves. I know that it just grabs some liquidity and it's going to push in the opposite direction. Sometimes though, this is the problem if you're holding these trades too long and you don't understand, how these markets move. Sometimes you might grab this liquidity here, lovely, it makes a little kickback, Bubble grabs this liquidity and then decides that it wants to go like this. And then continue coming back. And then you'll now figure to yourself, I've got in this trade over here. Why would I want to sit in this trade all the way up here? Let me show you how you make that decision. You make that decision because you're only going to stay in this trade if you see breaks of structure, beneath a certain time frame. If you see 4-hour break of structure go up, down, up. Like, look, this market is changing direction. Like, why do you want to stay in it? Yeah. I turn around and if I'm in good profits, I might just go down to a 5 minute. If I see a 5 minute break of structure, I'm just getting out. Why should I even stay in here for it to delete my profits even up to this high here? Why should I? When I can take my profits down here, and then when I see breaking structure again, I can get in again here for an even better entry and get in again as it comes down in here. Yeah? And sometimes if I'm in really good profits, I might even make that 1 minute or 2 minute. If I see a 2 minute break of structure, I'm getting out because I don't want to give any money back. I've just had this big win of the market coming down here. Why would I want to give money back as the market's break structure against me? I don't know what's changed in the world. What's changed in Great British Pound or US dollar that's going to make this say, you know what? In fact, we don't want to go down here no more. We actually want to start going all the way back up in here. I don't know if that's going to happen. So I don't have a crystal ball. So if I'm in all of this profits, I have to know when I've won and when I want to get out. And like I said to you, identifying the structure, and let's look at it on the other side. Let's back test it so you can turn around and see when it's happened previously. All right, look at this. Just so you can see it and you don't think, oh, well, Jesus is making this stuff up. All right. Let's imagine we're here and we've got a great entry. The market's broke structure. Over here, there's some minor structure in here. I'm looking on the 4 hour. If I go to the hour, you'll see the structure better. Market's broke this structure. It's made a retracement. It's closed back above. And you've decided, for whatever reason, you're going to get in here bullish for the buy. You've got to identify this structure. I'd say let's just go for here for now. When that market captures that structure, you need to understand it's going to run in the opposite direction. There's a very high possibility is I don't know, but let's see. Let's see if I'm going to get egg on my face. Let's go. Nam, 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 nam. Is it? Yeah? You got in this trade here because the market broke structure, retraced, closed back above. It captured this liquidity that was above this level here. Yeah? If I was to pull out a line like this is the liquidity grab. After you grab the liquidity, look at it running in the opposite direction. Meow! Why would you want to still be in this trade taking you all the way back down to zero? Unless your stop is somewhere comfortable and you're like, look, I'm just staying in this trade because I'm going to ride out this retracement, which is fine also. It is fine also if that's your decision, but then you have to understand where your targets are. All right? Because this is the safer place here if you believe that this market has broken structure and it's now going to become bullish. All right? If you believe that market is broken structure, it's now going to become bullish, go to space, you want to put your stop below us. This is the safest space below this swing low. All right, let's look at it again. Let's look to the left and see some more potential areas where the market can grab liquidity and then keep it moving. All right, so let's put these little lines in here. I should be using the line tool, but forgive me, it is. All right, and also even the level that it's just made. All right, oops. Let's have a look. Let's play it forwards. Look how deep that went. You would have probably been stopped out if your stop was. Yes, you wouldn't have been stopped out. The stop previously was below this low here. You would do now. All right. Let me crank this up a bit. It's taking too long. All right. Let's go to a 4 hour. So even as it comes down, it's creating more structure now. More structure, more little areas of liquidity. On a smaller time frame, you'll see the exact same thing happening. It capturing that liquidity and running in the opposite direction. How far it runs is depending on the overall momentum of the market, yeah, and how much liquidity was there. Let's go. Here we go. Pushed up in here, captured the liquidity above these levels, and also closed imbalances. This is us reading the story. Look, imbalance, all imbalance. Capture the liquidity and close the imbalance. And then what does it do? Runs in the opposite direction. Yeah? He runs with its spoils. All right? Let's go. Pushes all the way down here. Let's have a look. But does not break this structure. What does that mean? That means that this was the low. This was the higher high. This was the higher low. It's still bullish. Hasn't broken this structure. And now look, boom, explosion. And that explosion is not only captured the liquidity above here, but above this swing level here. There's some real liquidity here. Let's see if the market runs in the opposite direction now. Let's have a look. Uh-oh. Runs in the opposite direction after capturing the liquidity. Over and over and over and over again. And where is it going to potentially retrace to? Imbalances need to be filled. Inefficiencies need to be filled. If I was in a trade here, retracement trade for a sell, I'd be thinking to myself, yeah, you know, it's coming to close in inefficiencies. So if I was waiting for the buy, I'd be waiting prime ready right down here. Why would this be a great area that I'd be looking for to get into a trade? Somebody tell me. It's something to do with these green candles here. And it's the clue is SS. The clue is SS. Let's go. Who wants to win the fluffy toy and the trip to Jamaica and a Tesla and a microwave and an air fryer? Why would I be really like, I'm poised, I'm ready, I'm here for the buy. The market's a bullish market, breaking bullish structure. Why here, of all areas, would I be really interested to see what's going to happen in the market to get into a trade? Why?
Because when price has gone there, there's been strong selling orders. Yeah.
Say that again, and I want you to adjust what you said. When price has gone there, there's been strong selling orders.
There's been a reaction, and price has gone bearish from there.
I'm gonna open up to anybody else. I think you're saying something, but you're just a bit muddled at the moment. I think not exactly what I'm thinking. All right. Look, guys, SS, I gave you the clue. When you're in the markets and you see strength and speed, all right, from a particular area, this is where you saying strong selling, but this is where there's strong buying came into the market. There was very strong buying that happened here. Remember what I was saying to you? Let's go back to our analogy from last year. I think this is the analogy for 2023. This is a battle. We're in Jamaica or we're in Wakanda. Yeah. And over here, we had a level that the market came and couldn't break. Yeah. And when when all of these little soldiers here, these are my soldiers, these little dots. When finally, you know, the offense decided to say, you know what, this is where we've had enough. They smashed through here. They went nuts. They brought in big helicopters, Chinooks, grenades, rocket launchers, and they pushed through this area with real strength and speed. So much strength and so much speed that they might not have killed all of the enemy. They might not have checked all of the huts. They might not have looked at all of the tunnels. They might have even left some of their own men and women on the battlefield. So when we bust through there, we're happy, yeah, celebration, we're jubilating, we're all over the place. It's fantastic. But Brenda says, you know what? I think we need to go back and check, you know, to see whether these guys are actually getting up, dusting themselves off, and picking up the grenades, and they're going to come up behind us and shoot us in the back of the head. Also, she says, I can't see Terry. Where's Terry? I think we might have left Terry. Let's go back and check what's going on. So we go back to the battlefield of where we needed strength and speed to bust through. Now, I might get egg on my face, guys, because I'm just replaying this. But this would be an area of interest that I'd be looking at, yeah, of this market coming and tapping back in. Obviously, where would you place your stop? Ultimately, you want to place your stop below some sort of swing low level. Here's a swing low over here. Or if you want to go, there is another low over here. For now, let me be higher risk and put my stop over here. Let's see what happens. I don't know. Delicious. Forgive me, yeah. Delicious. The market came back over here, looked at the battlefield, cleared all the tunnels, had a look around, and then said, yeah, you know what, Brenda? Brenda was happy. She said, we're good. Boom! This is a fantastic move from here. Guys, I'm looking at this on a 4-hour time frame. Don't get it twisted. There is a beautiful tiny entry in here as the market decided to turn around and break structure. Let me show it to you, and that would give you show you how I'm able to catch big trades, how you can catch big trades. The market was coming down in this trajectory. Yeah, so it's trading down within this range. Okay, let's get rid of some of these other things. And this is great education for the YouTubers as well to see how we trade at Unity and how hopefully I am explaining it in a way that you can understand. Yeah, so you can read it for yourself. Not all of this jibber jabber about this, that, and the third, and the algorithm does this and blah, blah, blah. Who cares? I just don't care. I just don't care what the algorithm does. I want to know how to trade it. I want to know how to read it. I want to know how I'm going to profit from, seeing what's going on in the market. All right? Because this is the easiest bit, guys. What I'm teaching you right now is the easiest bit. I haven't battled with this bit. Guys, I'm not going to lie to you. I found this bit easy. I'll go further than that. I am inside the charts. Like, it's just zeros and ones when I sit down in front of my laptop. Yeah? There's other battles that you must conquer that's going to make you a good or bad trader. Your mindset, where you are mentally, your emotions, yeah, your greed, your fear. These are more powerful things that dictate. Have a look anyway. I'm on a 1 hour time frame. I want to show you the hour entry. The hour entries, this market was making lower lows, lower highs, lower lows, lower highs, lower lows. This is the lowest point. This is the high before the lowest point. All right. If you want me to identify it, I will do. When the market broke above and closed above this last high here, showing you the break, closing above it, somewhere around here, the retracement, the close back above it, this could have been your entry. Boom. When was the last time you took a 1 to 8.4 trade? There it is. Let me show you the smaller entry. I'm going to jump onto my 15-minute time frame. Have a look. 15-minute. Could it do it? On the 50-minute time frame, this is still the high. This market's come down in here, broken this level here. It broke this structure here. Look, on the 50-minute time frame, this becomes some structure, just like this is structure. The market closes back above here, makes a retracement, comes here, this wick doesn't close, wicks. Here it closes. Can you see here? Is it close above? That could have been my entry. And if I was aggressive, I could have placed my stop below the last low. This is an aggressive entry where you would get higher reward, but higher risk. Look how this wick came all the way down and nearly stopped you out. Maybe some unscrupulous broker spread is going to just nick you. Probably not, to be fair. I think it's quite big from here to here. Yeah, maybe. No, it's probably too big for a broker to open up his spread 4 or 5 pips. Maybe. But look, that would be a very aggressive entry. And on a 50-minute time frame, every single one of these levels here are a place where you can place your stop loss. But because they're on a 50-minute time frame, obviously they are higher risk than you looking at an hour level to place your stop. But let's just say, hey, look, that's a smaller entry. Let me show you the even smaller entry. All right. But you see, the smaller the entries, your targets have to be more risky. You don't want to place this here on the basis that this market is going to go all the way to the moon. Because you took a 15-minute entry here, you're going to be looking to the left at 15-minute structure. You're going to be looking here. You can't say I'm going to take a 5-minute trade and it's going to go all the way to 4-hour structure, all the way up in space. You cannot. In this particular example, we had this explosion that happened. That before you even realize walk on, yeah, 1 o'clock here, have a look. 1 o'clock here, markets opened. Yeah, New York opened. They sat at their desk. Yeah, it was getting ready, getting warm. And boom, before you even knew it, you're like, oh my goodness, I'm in massive amount of profits. This will be a great day for you. Because after you're in those profits and you've seen this huge green push up here, what would you be concerned about? What would you be concerned about, especially when we've just broken this level over here? What are you concerned about? So you're in this trade, everything's going good. You're pushing up here, you're pushing up here, you're pushing up here, pushing up. You broke this high over here. What are you concerned about? 2 concerns. Let's go. Somebody knows. This is a bit of a concern for me. all of this imbalance, all of this inefficiency where the market just smashed through all of these price points at 1,000,000 miles per hour, all of this area is a concern. And we just took the liquidities, which we'll be talking about all morning, above this high. And we know when the market takes liquidity, it likes to run in the opposite direction. So if I was in this down here, making all of this monies, what is that? A 1 to 20, all right? I'm like, I don't want to give back a single penny. But like, rah, I don't want to give back any money. Yeah. So as soon as we get up to this level here, I'll be very concerned. I would either take my profit straight away, or as soon as I see a small break in structure. Let me show you the break in structure that I'm concerned about. 5 minutes, to be fair, I wouldn't even be on a 5 minute. I'd probably be on a 1 minute. I'd be so concerned I want to lose any money. I'll be on a 1 minute. But on a 5 minute time, have a look at this. Have a look at this for the people that don't know how to manage their trades. Look, higher, high. Let me try and stretch this out a bit more. For the people that are at home, I'm giving the gems. I'm giving the gems. My God, I'm giving the gems. Higher, high. Higher, low. Higher, high. Higher, low. Higher, high. Higher, low. Why should I come out of the trade? Why should I come out of this trade? Higher, high. Have a look here. Even here, doesn't pushes down here. Does maybe someone might say it broke this little bit of structure. Okay. I don't think it did, but let's say it did. Broke the structure. I'm waiting for a retracement and a close back down below for me to get out. It didn't happen. Didn't happen, sorry. Continue to go higher, high. Higher, low. Higher, high. Higher, low. Higher, high. Now it's starting to level out, and I'm getting really concerned because we're kind of leveling out now. We're kind of in consolidation, going sideways. Look, if I wanted to be greedy and I was watching this keenly, I'd be watching it with my eagle eye. And even here, look. Maybe this might be a little break here. I'm trying to, let me just zoom in a bit more. So I'll get rid of that for now. Maybe over here, yeah, over here we did break this little level of structure here, but did we retrace and close back down below? The backline's going from early, all right? Did we retrace? Here's the break, here's the structure, just under here, broke. Did we retrace and close back down below? We did not. We wicked there and continued going in this direction. Look. Why would I be out of the trade? I'm still in the trade. I'm still in the trade. I'm still in the trade. Here, look, we closed down here, broke this structure here. We retraced over here. Just think of move out of the way. And then we closed down below. All right, cool. Tell you what, I mean, I've made so much money. I'm out, mate. I'm out. Market just broke structure. And look. Look how winky dink. Market starts to push down lower. Market starts to push down lower. If anything, I got out that the absolute optimal place where I could make a decision. I couldn't get up here because I don't know. There's no information for me to make that decision. As soon as it broke here, after this, shit started going back. Look, started going this way. Oh, started pushing down here. Oh, uh-oh. That's how you manage your trades. That's how you take the absolute skin off the bone, or the meat off the bone, I should say, or the marrow. You ever see mommy just going mad with a piece of chicken back in the day? Yeah, I see mom just wilding a piece of chicken in the marrow. Yeah, there is where I would have been out of the trade. Or I would have been happy with all the profits and say, you know what? Because the fear is this. Let me show you what the fear is when you're managing a trade like that. The fear is, for whatever reason, a candle just does that. It's not impossible. That for whatever reason, the candle comes out of nowhere and does. It's unlikely, unless there's some sort of news happening. It's unlikely. It's possible. It doesn't even give you the opportunity to make the decision to see the retracement and the close back down below. But it's unlikely, guys. If there was news coming out, get out. Get out and take your money. Because the news is going to make this say, wait a minute, did we see all this imbalance here? Who authorized this imbalance? I tell you what, let's close it. Could happen in seconds. And you're just sitting there thinking to yourself, am I a mug that was up a 1 to 20 trade and I stayed in here for this market to come and wick back in the opposite direction and stop me out? Obviously, it shouldn't have stopped you out for any losses because by now you would have been locking in profits. And when I say staying in the trade, guys, let me explain to you what I mean. This is me personally. And someone else trades a different way and puts in their TPs, I'm good, it's good for them. I would be moving my stop loss, locking in profits below structure. 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 or the structure below the structure, below the last structure. If you want to give it some more space, I'd be locking in profits, locking in profits. So when it finally does break here, break and retrace and break, worst case scenario, even if I'm kind of appeared from nowhere, I'm getting stopped out here. Best case scenario, I'm doing it manually at an optimal place as soon as I got the information. And there would even be you could be on a 1 minute time frame, but on a 1 minute time frame, you might have stopped yourself out a lot sooner because you might see a break, and that's fine. You know, it's fine. You want it to be extra cautious, so you use 1 minute as a way in which you can manage your trades, but 5 minutes is good enough. Have we learned something today, this morning? Do we understand what I've been teaching here in regards to structure, in regards to the market grabbing liquidity, running in the opposite direction, in regard to strength and speed? For example, this area here, where this explosion happened, this is going to be another point of interest between here and here. It's going to be another point of interest when the market gets back down here. I'm not trying to say that it's going to touch there and go to space again, but there may be some sort of reaction. Let me try and play it forward and see. But it's also dependent on, yeah, let's leave it. I like this area. No problem. Let's see. I'm going to play it forward, see what happens. Let me play it forward on a bigger time frame so we're not sitting here for the whole day. And then we're going to finish up. All right. Let's have a look. Let us have a look. And yeah, now this market is in this bullish impulse. So it's, you know, this may be what happens when it decides to start coming down, and that may be in the future. All right. So let's leave it. Actually, I want to show you something. Let me show you something. We're going to leave it. We're going to watch it. I'm going to put it on a 4 hour time frame, and we're going to watch it. I don't know. No, because the market hasn't got down there yet. All right. But what I can say is this is an area that you're going to be able to have to identify that when the market gets back down here, more than likely you're going to see a reaction. All right. We're not seeing that. It's not come down here yet because we're driving in this direction at the moment. We've got no reason to come across this speed hump. But when we do start coming in this direction, this will be a speed hump you must pay attention to. All right. Guys, I hope you've learned and you've got massive, tremendous value from this morning. I hope you have. I wish when I was learning how to trade, I had somebody holding my hands who could talk me through it, who I could ask questions, who I was able to, you know, go over these things every single day, because it would have significantly reduced my learning curve, okay? Allowed me to focus on some of the other areas, yeah? Allowed me to focus on, you know, raising capital, doing other things, etc., etc., etc. But everything happens the way it's supposed to happen, guys. I've enjoyed my journey, and now you must enjoy your journey. The fact that you're not right now killing it, buying a Lamborghini from all of your profits from trading is irrelevant. The money will come. Yeah, and that's what should keep you going, understanding the money will come. Because lots of people go to university to be a lawyer, doctor, whatever it may be, and they're there doing it, going through the pain and the exams because they think to themselves that, yeah, one day they're going to become a doctor. Go find them now. Go see what ward they're working on. They're not on no ward, but they had no issues with doing the homework, with paying for the education, for going and staying on campus, for dealing with the headache and the stress, because they believed at some point they will be redeemed by getting a job in that industry. Well, it's the exact same principle when it comes to trading, guys. Yeah, it's the exact same principle. Only difference is when you learn this skill, because after you've learned how to be a doctor and you're absolutely fantastic, you still got to go with your begging ball hoping you can get a job. Yes, sir, here's my CV, sir. Yes, this is what I can do. Let me start as a junior, sir, and start on a low wage, sir, and then wake up and work my way up to getting a good wage. Well, not in this game. In this game, when you get it, you're ready to go. You could have the best year of your life or the best 6 months of your life, making more money than you've ever made in your entire life in 6 months to a year once you learn how to get this. All right, guys, good morning. Is there anything anybody wants to say this morning? Leave us with some prayer, a word of wisdom, some good energy, whatever you want to do. It's welcome with the family. Yeah. If not, I'm going to love you.
Thanks for that breakdown. Yeah, really, really helpful. Thank you.
Thank you there, Corinne. Yeah, have a lovely day. I hope your little one's doing well. I know they are. So good morning. God bless. Go for your potential. I'm going to probably play something on here that's relevant to personal development. All right, that's what we're all about. Or something of interest. I'm going to play something by someone I started watching last night, but I only watched about 10 minutes of it. It's an interview with a trader who says that they're going to share the blueprint of how to become profitable. All right. And that's going to be interesting. But guys, on that note, let me stop all of our channels. Guys, if you're on YouTube, please do like, please do subscribe, share, say, listen, there's some madman. It's from the village, and he's teaching trading in a really, palatable way for me to understand what's going on.